Hey, good morning in the US and good afternoon, and welcome to our final live stream of 2021. It's the Mohawk Forex scalping team here, and we're here today in the holiday period. Happy holiday. Obviously it's the 29th, still in that weird period of time where people don't know what to do, but here in Mohawk we like to trade. The low volume gives us an opportunity to not panic with true scalping. On smaller time frames, catch some nice smooth moves, and obviously we've still got plenty of news to trade, which is what we're doing today. And we're going to be looking at trading the goods trades balance news, wholesale inventories and the retail inventories, which is coming up in about 9 minutes time, as you can see. Then we'll have the New York Open, and then half an hour after that we'll be trading the pending homes news, a medium impact one, and then one of our favorites, the EIA crude oil stocks change. As we traded the API last night, I ended my last live stream while we're in the middle of the trade, and in the end the trade did actually hit profit. I'll go over that in the next few minutes and just show you that was a successful trade. So yeah, the news events still happen even in this period. Obviously they don't catch as much volume, but they still can move the markets in the direction we need to move in. Now obviously the whole title of this video is about the RSI, which is fundamentally our RSI scanner here that you get once you join our join our VIP trading group. Get access to our Axe trading system, in which the RSI scanner I use here is part of it, and I do believe it's the best RSI scanner I've come across, because we use the RSI in the correct way, not where we're always trying to catch reversals. We're using it to catch trends and get in on initial moves that other people forget and miss, because they're always looking at trading the oversold and overbought zones on the RSI. So on here we're on the US 30, we're on our 3-minute time frame with a nice double top M pattern, nice drop here, look, nice second leg, which no doubt some of the team could have caught. And now we're literally waiting for it to form a W pattern, as you can see, just poking up to see if it breaks our trend line before this news. As we know, with the news events that are pre-market open, we trade the reverse. So we'll be going on gold in the direction of the news, and you can see here gold smashed a couple of our earlier TPs on its way down, back down to 1791. So gold getting some great re-entries on our RSI. I'll go over this once we've traded this first news event. I'll go over how we use the RSI, and you can see how good it is for trading. If you don't want to trade fundamentals, or we incorporate fundamentals and news as part of our group, well, you don't have to. You can just avoid the news if you want. I don't know why, because it's money, but some people don't like trading news events, so you can scalp with our scanner. So we'll be trading gold going the way of the news, and with the US 30 we'll probably look to go the opposite direction. Depends what we're sat on here. We're sat on our points of interest, support and resistance zones. Our blue zones are more valuable, as I call them, support and resistance zones to watch out for, and our trend lines, which are automatic and get added to the chart as and when a trend forms. As you can see, form a W, we need it to break our trend line, and then we'll get that W formation. Second leg could go back and touch our top trend line here. Depends on the market. At the moment RSI is in the neutral zone. We'll like to catch buys once it goes green and pops out of that neutral zone. First things first, we're about 6 minutes away from the goods trade balance and the wholesale inventories. The goods trade is the main one, and as you can see here, higher than expected figure is positive, bullish for the dollar, lower is negative. So obviously we expect it to be minus 86 billion as opposed to last month's minus 82. It's a bigger deficit. So we'll just wait and see. And obviously, like I say, you know, we will go the opposite way for 50 to 100 points, which is about 5 to 10 pips per entry. That's the strategy that I use. Financial advice is just the system I tend to use. Coffee on. So we will just ready.
Infrastructure today could support getting up to about 15% of autos being EVs. Now, ultimately, you're going to have to get charging stations up to about 500,000 by the end of the decade. But I mean, with the growth potential, that's why we view it. It's a $5 trillion green tidal wave in terms of the
Remember,
spend over the
it's
next decade.
free
You start
market,
to hit some issues in terms
which means there's manipulation, and you can catch that manipulation, turn it into profit. That's the whole idea about the system that I teach, how to trade the fundamentals. So we're just getting ready for that. Just logging into my broker, make sure I've got gold and US30 set up. I use IC Markets, which I still believe is the best account for scalping.
But does any other manufacturer do it as big
Gold
as Tesla? I mean,
set up. We'll just clear everything.
Huge, but I haven't seen any of the competitors go out and do it on their own. They're all
and when you join the group, I do post a lot of daily setups, a lot of charts and stuff, so people to follow, setups that I'm looking to take. Obviously, I'm not clicking and buying buy and sell button for people. You've got to make your own mind up, but I'm giving you as good as it can in terms of my opinion and what trades I am personally looking for, and that's kind of what you get for being part of the group. Oil I'll go over because oil was great. We took a sell last night on the oil news, and obviously we hit TP. I think we got about, the video was meant to be $200, and I think it was around about that, maybe a bit less. So it was pretty good for a holiday period trade. Obviously we've got Bloomberg on. We always keep an eye on the news fundamentals in the background. I'm not interested in pumping out loads of disco music because this is important to keep an eye on the news as it's happening when you're a fundamental trader. And Bloomberg, there's various channels, but I don't mind Bloomberg. It's quite good on the information. There's always a bit of lag when watching it on YouTube. I can have it live on a screen as well. So just checking on the news on investing.com. Again, something I always recommend everyone should have an account with. US futures edge higher, Omicron confidence rises. Yes, because obviously we're looking at it being not as bad. All markets are looking to push up.
Germany for the government to spend money on infrastructure, Mac, as you've experienced.
Yeah, up. The new highs were reached yesterday. NAS climbed from its drop-off as well. Economic data, including consumer confidence expected in December, despite the resurgence, should be good. Your stocks, if you trade, oil prices edged lower. We've got oil to trade later on, like as we can see as well. Gold futures obviously will be lower as S30 gets stronger. Expect that correlation. Kind of what we're used to. So keep an eye on all the fundamentals, of course. Some just positions as well. We've got 2 minutes, 2-3 minutes to the news yet. We're okay still. It's the index, so we've got gonna have about an hour before the open, which is pretty cool to follow. Again, everything's kind of mid-range. There's nothing really happening. Nothing's really overbought or oversold. NAS has recovered, pushing back probably to the green. We'll see. We're focusing, like I said, on US30 and on gold. Gold will be our main focus on our chart here, as you can see. And we want to try and get 50 to 100 points up. We're 118 to our baseline. If it's a good news buy. So here's the news look, as you can see. Trades balance.
And they drop off coffee, chocolate, Kit Kat, toffee crisp, you name it. If it's made by Nestle, it will come through here and it'll get sorted by machines who will then load it onto a monorail.
US30 as well. They're both in the same position at the moment. You know, taking a dive. Expect US30 to push on back up again.
Then load all of the chocolates.
Like I said, I want to go over the trade we took last night on oil, which was a good one. And how to use the RSI to scalp 20 or 30 times a day on a 3-minute time frame and earn that magical, like I say, 200, 300, 400, 500, whatever you set out to be. Obviously you need to put money into an account. You're not going to do that with a $100 account. You can double a $100 account. It takes a slightly different way to do it, but I can show people how to do it, which I have done in the group. Obviously ideally you want to have, you know, $1,000 account to start trading successfully. I always say you need to accept the drawdown and have money in there that you can afford to lose, of course, not your life savings. So here we go, let's see what happens. We'll just get everything ready, we'll load it in on gold and let's see what we get. Goods trades balance, the November obviously preliminary, and the retail inventories. Obviously we'd like if all three news events have the same result. Don't always get that, but let's see. Have a coffee. So we're looking at bad and one good. So obviously we're going to look at taking a sell on gold and look at taking some buys on US30. Let's try and catch that manipulation. Let's let it ride. We'll just post that into the group so everyone can see. These retail sales, yeah, obviously push back a little bit, so that might skew the result a little bit, but overall worse. Let's have a look how that's affected. It's going to be slow moving, remember, we're not in a volatile, we're in a closed market basically, so don't expect anything to shoot in any kind of direction.
Just woke up. Let's take a little look. Up 4 basis points on 10s to 151.86. There you go, a lift across the curve, up 5 basis points on 30s to almost 195. So the curve a bit steeper here with the front end pinned, the 2-year down by about half a basis point, 75 on 2s, on 10s 152. The spread between the two, about 77 basis points or so. In the FX market, euro dollar 113.11, basically unchanged there. Unchanged in the equity market as well on the S&P 500. In the commodity market, 75.87. On crude, we're negative there, a little more than 0.1%. Great guest joining Kaylee, Matt and I now. David Kotok, the co-founder and CIO of Cumberland Advisors. David,
And see.
To do
we're slow burning this, of course, and US30, want that to break that trend line. US30, you know, you don't have to jump in on a trade, you can wait. You want to take a buy, wait till it bottoms out and then take the buy back up to the zone. You don't have to go straight in. I went straight in on gold just because I like to do that, but on US30 it's even more slow.
The morning session that you do in the 7 o'clock hour is the one that's reporting the status of this pandemic. When you hit the history of all pandemics, they are a lesson.
Like I say, you're looking for that magical
business cycle that's typical, and that's being missed here. We're too much in the weeds.
Actually set that line as a potential profit. It'll be our resistance line. Of that. RSI is the key look, it's dipping down, it wants to go back up again. So that you're going to trade US30. And obviously on gold.
Is the impact. I read Milton Friedman's treatise. I read Alan Meltzer's treatise. They talk about the Fed. They don't even mention a pandemic. And that's a whole different.
See what we get. So we'll just watch that. Decide to shoot up against us. That's fine. Got a trend line here. So again, if you're taking a short on this,
big picture of a pandemic shock.
But David, when we look at it from
a corporate
perspective,
yeah,
profits have held in there. They've done actually quite well. They've continually surprised to the upside. Do you not buy into the idea that you can look through
and here, look,
the pandemic?
that's our neutral distance zone. Just want to be above it. That's the
so long as earnings growth
kind of what I'm thinking. Gold and for US30, see you're taking a long, going to be
8, 10, 12, it makes no
difference.
It's powerful. Why do we have the earnings growth? We have
again, your stop loss is going to be just outside this. Again, the blue line is our daily pivot kind of neutral resistance. So there you go. That's they're your setups. We're in a bit of profit now on US30. Wait and see. While they're playing out, let me go over the oil trade, because the oil news from last night. This one here, look. Push this chart.
pandemic in history
relog in, which is
has a
sometimes
fall in
do
the
it.
real
So,
interest rate
fine.
and a substitution of
It was an interesting one
Those were the
because it was
macro
as it closed,
Jay Powell understands this, and I believe
it was worse than
the
expected.
composition of the Board of Governors will also reflect it if it's the nominees we're seeing being proposed and vetted now in the public area. So big picture.
And there you can see there was the news, worse than expected, at 9:30 UK time.
Inflation will roll over back.
So a news event.
And it'll happen faster than people think as the shock adjustment rolls out.
Well, you mentioned the empty seats that are still remaining at the Fed, and depending on who sits them, do you think we could be looking at a different trajectory of policy moving forward?
Well, if we look at the three names that are surfaced in the Wall Street Journal yesterday, they lean center, but
was there, and there was the from here we look at taking 100 points basically. So we entered a sell there, look, and there's your TP right here. So nice win on that API news just there, look, go. The hit TP perfectly. I wasn't live when that result hit, like I say, because it was 3, 6, 9, 10, about 50 minutes after I ended the live stream. So, but there was the TP hit 100 on the sell, and obviously it decides to reverse and then comes back and then hits it again. Look, so you could have done a double whammy on it. I sometimes like to do that, play the market its own game with the manipulation, and if you know you're looking to take a sell because the news was bad, and obviously you know all this, you could trade the buy if you wanted to, but this could reverse on you any time because the fundamentals still controlling this, especially during this kind of start of Asian session, start of the Aussie session. And then obviously one side, see that if I was been awake, you know, and trading this here, you could see here this grey candle would be a nice indicator that the sell is coming again, and you could have got in again on a double whammy. So definitely on there, look, for another 100 pips, or hold that same line. When it's already been tested once, and it's in fact 2 times, there's always a good chance price is going to come back down and hit it again. So you could settle for 100, or you could be really adventurous, especially if it's a slow moving Asian session, you know, like 20 minutes into Asia. You could hold for that, and that would have been a nice, you know, 150. You take your spread off 120, you know, 12 pips, which is great. Trading oil that time of night, you know, a couple of trades, that would be, you know, $100, $150. And that's how you can use the RSI in conjunction with our baseline and price action. Like I say, look, you've got the RSI breaking out the zone, perfect on here, and that's what you want to see. And obviously hit TP, reversed up. Yeah, you could have got back in again, possibly on another. I love it when the RSI goes in and out, so you can get in on another trade again. This is kind of how we use the RSI. That's why I say I do believe it's the best RSI system out there at the moment. There's a fair few. Everyone quotes theirs as the best, but this is steady and reliable for me. And I don't just trade one indicator. Like I say, I'm based on fundamentals as well. But if you can backtest this, looking at the every time it comes in and out of a neutral zone and our average RSI line, which is unique to our system. We've got the overbought and oversold zones, nothing fancy about that. You know, I just set them at 75 and 85 and 25. So, but all this is kind of designed by the guys who run all the technical side of things for me in the group. So this is why I say it's a good RSI scanner, and it comes with divergence as well. So if you like trading divergence, you'll enjoy this as well. Gives you hidden divergence and standard ones as well. But every time you see a kind of grey zone where the price is going neutral and you see it coming back out again red, this is where you want to be trying to get in on a scalp. Then from here, look, you can see we ended up coming out of our average line going green, there's take the buy, and then here again is where you would sell. And I'm just picking on oil. Obviously you've got to consider spreads and stuff as well when doing this, so I don't always micro scalp oil. It's usually based on the news that I will do that. So as you can see on here, so you've got 1, 2, 3, 4, 5 potential trades. Our trend bar as well, look, when this changes color is a good time direction. This is giving you the trend, which obviously is red. You can see it's selling at the moment, and then it goes dull again. When it goes dull again, that means, you know, there's a good chance the trend is changing. Like here it was green, dull, change of trend, red, dull, change of trend. So it's pretty cool as well to help you out. And when you add it to price action, see then whether you would take them trades. Like I say, we'd have definitely taken this trade, definitely taken this one, and this one here, look, again, is right on your TP line. It isn't a support and resistance line, it's just the TP line that we set for 100 points. So kind of take that off and go, okay, yeah, I'll go again. And look, again, you know, flashed around a little bit, but then you just go in, don't be greedy, just go for 5 to 10 pips. Look, you know, it hit 100 pips about 15-20 minutes later. Look again, and you expect to hold a little bit longer with these trades because of the market at the moment. I mean, it's no you know, you're not going to get these quick moves at the moment just because of how the market is. So always be aware of that. You know, usually we like to get the quick spikes in and out and we're done, but this time of year it doesn't always work like that. So that there was another winning trade. Then you've got the buy here. Look, there was the grey candle there. But again, as soon as you see it come out of the grey, you're probably getting on that next candle. It's close to that points of interest line. But again, you can either get straight in and just scalp to that points of interest line, which would be 5 pips, totally fine. You know, and that's probably what I would do. I would set for 100 and I'd probably get out hitting that line because it is a resistance zone. As you can see, then price did back, and you can see from the price action on the candles, it pushing down, pushing down, pushing down. So there's no kind of bullish breakout candle. They're all fairly low, as you'd expect, being, you know, towards the end of the Asian session. So that, you know, you just go to the next nearest line on our grid. That's 5 pips. It's 5 pips. It's still a winning trade. And then on this one here, exactly the same again on the buy, on the sell here. Look, you'd get in on this one. Again, look for 5 to 10. Go on that candle there. Again, you don't quite get that one. So again, you wouldn't necessarily end the trade because look, it hasn't broken any it hasn't broken our resistance lines, banged against it, and you've already seen it retest and drop. There's a good chance it's going to do the same again. So if I was in this trade here, I wouldn't panic. I would see that green candle and go, okay, get ready to end the trade, get ready. If the candle breaks that, ends above our points of resistance, points of interest line, then I would, especially looking at the RSI. So you'd be prepared to take the loss here, getting ready to take the loss. Wait. As soon as you see it finish above, that would be the end of the trade, but it didn't. But then it came back and ended up hitting your DP. You know, you got, go look, 100. Again, as soon as you see that blue zone form, you end the trade, whether that's 8 pips, 10 pips or whatever. So that would be the end of the trade. Again, another winning trade. Like I say, you just, with this zone, you've just got to hang on a little bit longer. Don't make snap decisions. And like I say, if you were pulling out the tools on short tool, that's where you entered the trade. You're looking for that 100 points, 100, and your TP, you know, your stop loss is too tight on that one. It's going to have to be, look left, see where there's a decent kind of, I would look at the last highest zone, which would be probably about there. Look, again, that candle poked here, look, it was here again. So just go above that. I'm not going to go crazy and have a stop loss like here. I mean, it's just ridiculous. You know, you can end the trade way before. You know, but at the same time, you don't want to get spiked out. So you just want to be above the last couple of highest candles previous. This one here, and all the way back to here. Here's the flat part of our baseline, which is also telling you this is where price can hit before reversing back. And as you can see, you can put a line across that, and you can actually see that does stand up. So you could have your stop loss there. As you can see, you don't get stopped out, and you could walk away with that, have a sleep, do whatever, come back, and it's a tight stop loss for me. But you're looking at the TA, and based on the TA of the points of interest line, which are always zones. They're never exact precise lines, but you're always dealing with zones. So when you get our baseline going flat, that in conjunction gives us a zone here. Look, so you want to be just above that. So probably you could just go a little bit higher, but you get my point. That would be a winning trade. You know, I sit and watch my trades obviously a lot of the time. You wouldn't necessarily have to do that. You could just walk away and have that set 50, you know, you could 5 pips, 10 pips, doesn't matter, and that would hit. That's how you do that one. And then on the long on this one here would be similar kind of setup. You either go low points of interest or our line here, look.
There'll be some issues around wages. The industry is making a lot of money. The longshore folks
as your stop loss, and obviously your TP again, you're going to set it, as I said, I would set that for, again, I might look at that baseline, and that's it. And again, whatever it is, 70.7 pips, doesn't matter. It is what it is. You set it higher, but you know you're going to get resistance because of that flat line, the zone, the points of interest. It'd be lovely to break it and hit up here, look, but again, it's only done that back here. But again, these are micro scalps. This is how you do the true scalping, so that's what you're looking for on these setups. And again, you're pulling out the short position on here. My stop loss would be just above that flat part, our baseline, above points of interest, the next nearest zone, and again I'm looking for 100 to 100 in the non-full risk, 69 and there 101. So that would be your third trade. All these in the Asian session you can walk away from if you want to once you set. And this is, again, you know, the trigger is the RSI, and then your setup is based on our grid points of interest. Again, on this short, yeah, if you pull out the tool, you're taking the trade there, your stop loss is going to be just above our flat baseline. You know, again, you don't need to go crazy and have it above the next points of interest. Flat part of that will do as you'll get out. And again, you're looking for 100 points, 10 pips. Bang.
The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next?
And then obviously the initial one on the for the news, again, you're taking the short there. And again, on this one, my stop loss would be, because you're taking it right here, your stop loss is not going to be this points of interest. Look how tight it is. And you would have been spiked, well, you wouldn't have been spiked out because you would have hit profit, but I would still, this one might be a bigger stop loss. I would look at that zone, either the tops of these candles or our breakout zone there. So it's a bit of a wider stop loss on this, but I'm more confident the trade's going to hit because of that news. And again, you go for 100 points, look, across. that is a
John Riding, Chief Economic Advisor at Green Capital.
yeah, nice easy winning trade in 3, 6, 9, 10 minutes. And look at it, spiked up. So you know, you could put your stop loss there. It did, you didn't get stopped out, it did hit your profit before getting stopped out. It gets very tight from where the entry is. And again, you know, just above it as a zone. Never go on, just try and go above it. So, but for me, I would have had it probably here. Look, tops of those candles.
I'm kidding.
Yeah, look.
That's what all old people think, right?
And then you can walk away again. So that's kind of how you use the RSI again.
But you're right.
And back test and use the RSI as a scanner to give you your entry points, and then use price action. And you know you're really looking for sales. Okay, we took a buy here, counter buy, because we just saw the price. We could almost leave this one out. We're looking to take sales because the news which came out was bad news, and market likes just to push that away for a little bit. So that's one of the reasons why.
All right, let's bring in someone else older and wiser than me to talk about this more.
Just check back on our trades.
Wealth Management Chairman and Chief Investment Officer joining
you can
us.
see
Barry, when we talk about what normal looks like post-pandemic, is there such a thing, or have
US 30 spike down
for the longer term?
I'm still in that trade. So I'm down about $32 on this one, so I haven't put a stop loss in on this one, so you would have been stopped out. So this would have been a loss. That's fine. You expect it this time of year, you know what I mean? It's kind of buy. I mean, it was so close to hitting our TP. It might have actually hit it. It spike up and hit before, so you might not have done. I mean, again, I wasn't watching it, sorry, I was just away from the chart looking at oil, but as you can see here, the TP was there. Let's see if that was 50 to 100 points. There we end trade. There was your entry, bottom of that candle. No, just short, 72. Again, you might still be in this trade. US 30, I'm actually only 15 down now. Gold, I'm in profit. So, again, this is why I hate using stop loss a lot of the time, because these SPY accounts, because I'm in the trade holding, but your stop loss using the TA would be there, would be correct, perfectly right. You either take the profit. I was watching this, I could have taken the profit before we got spiked out. So I'll put this down as a winning trade. It's not cheating. It's just, if I'd been watching it, I would have taken my profit. I was actually not looking. I'm just checking back in with my broker now. I'm up on gold, about $50 up at the moment, and we're up on US 30 as it pushes back. If this candle hits here, then we'll get out of this trade. Slow moving, as I said, but let's have a look at gold. Sorry, gold safe at the moment, as you can see. Is our gold trade. Just going to get out of that actually at the moment. Some good profit on that. And bang, there we go. So we made 41 and 35, so we made £76. That's about $100 on this trade here. I've just come out of that one just because we're sat on this level, and again, it's been 20 minutes since. And the whole idea about scalping this way is that you're meant to be in and out quickly. So I'm not greedy. $100. Post that in the group. You can see. Did sell gold. Nice.
Anyone expected them to get that right is giving them too much credit. Number one. But if we listen to the CEOs of various automobiles,
and again, that might come down lower, but of course, when we have the open, we're looking to take the reverse. That's the whole idea behind it. So that, if you walked away from this one, this would be fine. We'll keep an eye on this, see if it goes any lower, but obviously that is, you know, so 175, and we're only looking for 100 points. This one anyway. So
reduced automobile manufacturing, which means that we're going to have reduced used car availability.
About there, 105. So it's actually it TP, because it's usually about 40. About 40. So I'm still in the transitory camp, fine. But it's going to be a long back on the US 30. Oh, we go. Right, let's end that trade as well. US 30.
Chairman and CIO at Ritholtz Wealth Management.
So that RSI is now 56. You see what I mean about stop losses? Why I like to watch my charts, because I'm in the trade. You know, I'm in profit. I wouldn't be losing because of that spike, because this is a flash spike. The candle doesn't finish below our zone. But where would you put your stop loss? You're going to have to put it somewhere. So this is just pure nice spike to catch people out who use stop loss. But you have to be very careful with the stop loss. And that's a, you know, again, it did hit the TP here. Look, as you can see, 3, 6, 9 minutes. It hit it. But for some reason, if you set it, didn't set it right, whatever, then I just kept mine going because I've not preset. I've not put in 5 pips or 10 pips in my trade, is what I'm trying to tell you guys. I'm just letting this run just for the demonstration of this live stream. So RSI is looking good. Look, it's at 57. As you can see, it's been red for such a long time. So it's a nice little pullback. Again, going against the news. And again, you know, I'm not going to make big bucks on this. This is just a counter trend trade, like 30 minutes before the open. And also in 5 minutes time, we've got that usual again, little spike, little move that price action happens before the New York Open. Always 30 minutes below. So I'll keep this running because I'm in about $10 profit at the moment on this trade. But like I say, that's a valid trade. But like I say, this we have to be careful with stop loss.
All right, Barry Ritholtz, Bloomberg opinion columnist, and from Ritholtz Wealth Management, thank you so much for joining us. And Matt, I think it's a really important point when we think about this market. What we're really talking about is the heavyweights. They make up a quarter of the.
You know, I'm convinced that more traders lose money because of stop losses than actually because of poor decisions trading. Because that is the market. That's the way it's set up against you. You know, I'm not saying don't use a stop loss, but I'm just saying, just, you know, this just proves it. Look, you've been stopped out if you miss that TP, and then it comes back and it's hit our target now, and you go down. You know, it always happens time and time again. You know, so that's why you have to be very careful and have money in an account to accept some drawdown before the market swings your way. So here, look, I don't know if it's going to break this TP. It's hit the TP, as you can see. Just holding. If I can get $30, this is fine. Again, it's not going to be millionaires on this trade, but I'm just trying to show you how to use this system, even in a not great trading period, this holiday period right now. You know.
Coming up later on Bloomberg, on TV and radio. This is Bloomberg.
There we go. I've ended the trade. There you go. So I just cancelled that trade, and it was £16. So that's about $26. There you go. Again, but it's a win. You know, what started as a loss was a win, and that's what this game is all about. I'm going against the news. Remember. And if we look on Bloomberg, Dow's look one way to go yet. Still end up going back up again, but it's still low volume, as we know. So we've got about 30 minutes now before the open, and then we'll be trading this again. It'll be even slower, this pending home sale. This is all, I didn't do this last year. I had a break on a holiday. Obviously I wasn't doing YouTube, so this is just purely, I'm just, you know, first time I'm going to have a go live, and if I win I win, if I lose I lose. You know, I'm already playing with house money, so this is, you know, we've had a good trading week for a holiday period, so you know, we're not going crazy lot sizes, but we just want to see and if these news events move, and you make a note, you make a log, you make a note of which news events work and which don't, and what they work on, and obviously you trade them if they do, and you don't trade them if they don't, you know. And then the news events come out all the time, same, it's just repetitive. That's what you've got to do. That's what this game's about.
penniless Scottish widows has blossomed into a $35 trillion pool of assets that relies on...
And then we've got our crude oil, which again will be a slow burner, but we'll finish the live stream trading the oil as well. See if we can get another win on it. See if Sin.com said anything.
You need to understand the market's ongoing.
Nothing really about
So subscribe to the Outthinking Investor.
news. You see, it's all been skirted over it. As you can see, it's worse than expected. Inventories, the retail up a little bit. This is from last month, you know. Pending homes year is November year on year, month on month. And again, it's usual. Unexpected is positive, lower negative.
The European energy complex has
It's back on the US 30. Look, you can see there. Look, that's, you know, again against our trend line. That's why I ended the trade. You know, I only wanted 5 to 100 points. Look, we got kind of, you know, 5 in the end. It's totally fine. It is what it is. You've got to take what you've got to take. And some of you could say, well, why don't you trade the way of the news? Because, you know, it was a sell. Okay, it was this time, but it's not always. More times than not, it manipulates, it goes the opposite way. And as you can see, you had that spike up going against the news and down. You can trade both ways. I've done it. You can trade both ways. But the strategy is pre-market, you would go reverse against the news. Post-market, to go with it. That's the system I stick to, and that's got the biggest win rate I've had from trading fundamentals. So I'm not going to change it, even if I see something like this saying, well, why not to just take the sell? I'd have won anyway. It doesn't matter, because then that changes your whole psyche about trading, and you start doing that all the time, and then you get burnt. You know, it would be so easy if all the time news the price action goes with the news. It doesn't. So you've got to learn how to trade the manipulation, even if it's small gains like that. It's $25 now. Look, see, it's broke the level. I could have held, you know, could have got a bit more, could have got $30, $40, $50 now. Look, it hit the TP. That's the most important thing, is that, let's get rid of this box, it hit. Anything, like I said, will catch you out as despite, and no one's going to put a stop loss crazy here. So with the new, you know, if the candle had finished below, then yes, that's when I would end the trade, but it didn't. It just spiked back up and up it goes.
Then I think we start to have a little bit more concern.
The S&P kind of peaks during 2Q around 5,000.
Joining us now is Allsprings, Margie Batal, and Bank of America's Matt Diesel. Let's begin with you, Margie, and start with the big call for 22 for you. Where's your conviction at the moment, Margie?
Now the key level's broken and it'll back off that, so that's great. And the RSI, look, you see you'd be in, you could have been in on a buy. If you missed it, so you did end the trade here and a loss, you'd get it back here. You know, if you entered that trade there and you took a loss of 130 points, and then you entered the buy here, look, now you'd be 100 up. Now, this would be a $50 win now. It doesn't matter, you know, you got to trade the way, stick to the strategy.
That same policy, and I think they're actually quite pleased with the results. So I think the Fed is very, very reluctant to raise rates aggressively, slow down housing, maybe raise unemployment. That's their other really main goal, is keeping unemployment rates very low. So I think they will disappoint the market in thinking that they're going to be aggressive. I think they will be very passive. If they're ignoring inflation, I'm going to ignore inflation as far as that being a factor in my investments and what the Fed might do to rates.
Well, that's an outlier call right now. We'll come back to what it means for your investments. Matt Diesel, let's bring you into the conversation. On the Fed, can they ignore inflation?
No, they can't. They finally figured that out, and that is a good thing. Obviously, they made a big pivot in December, but more importantly than the pivot itself is the fact that they have decided they could be more nimble. Took them almost 6 months to prepare us for the taper timeline they laid out in November, and then less than 6 weeks later,
That beautiful,
they totally flipped
beautiful
the
move now.
doubled the taper, went to potentially 3 rate hikes next year. So this is, in our opinion, a good thing. The Fed needs to be more nimble. It needs to react better to incoming data. Clearly, the data has said they're behind the curve. They're trying to figure out now how far behind the curve they are, but they're definitely behind the curve, and they are going to get out in front of the curve, hopefully at some point in 2022. And that is one of the reasons the market has taken this so well. They don't want a Fed on autopilot. They don't want a Fed that's not nimble to the incoming data. So being more proactive, getting off the zero bound, getting to a more normal level of rates will be the right thing to do. And so this should keep the economy humming along. And you can see that in the yield curve. Yield curve has been flattening dramatically, especially 10s, 30s. That paused at around 30 or so, and it's back to 40 basis points or so. So that's a good normal level. And so the yield
So it's nice. There you go.
stopped its flattening trend of the last month. That's a good sign from our perspective.
It shows you the manipulation. It's like a double manipulation. It's manipulation because the news was bad, so it should be selling, but it was going good. And then you get this trick second manipulation that cancels out anybody that put in a stop loss, or, you know, as you can see, it's right on our neutral support. This is our kind of daily pivot, so this is where price has formed that W. Look, perfect kind of TA on this as well. You know, there's a double top there. You can see, roll that out. You can. These are the best kind of things to trade in conjunction. If the fundamentals go the way of, you know, a nice pattern like this, then that's even better for us. So there is your tap tap and down. Our zone came in to show you that, and then we look for the second leg, which again we'd assume would bounce off our daily pivot on the 3-minute time frame, and then there we go. Look, there's your second leg, probably to our breakout zone. Look, it'd be nice if it breaks this. We want it to be good news. We do on the
Michigan are at extremely low levels. You don't often see this positively strong a labor market and consumer confidence this low. So what that's telling you is the Fed will have a little bit of help in getting inflation back down. So it's probably not going to stay at the 7% level on its own. The Fed's going to have to help it get down. But when you marry the fact that people are not reacting to higher prices by purchasing more, that's affecting consumer confidence, that orders and inflation is already starting to change behavior. Yep. So that behavior changing with higher rates, that should lead.
So we've got, and again, see, didn't I tell you that, you know, it has got 30 minutes before the open, you get these moves. 30 minutes before the market suddenly decides to go our way. Now we've got, now if you was in a buy, here's you'd end the trade. Look, see that flashed in? There you go. Look, this zone holds. I told you it's the breakout zone. It's the resistance zone. This is where, when I'm scalping, as soon as I see those zones form, look, I'm out of the trade. Wait for it to stick if you want. But look at RSI as well. Look at RSI, you see? RSI, nice little peak. When you see this peak and a drop off, that's when I get out of the trade as well.
Secondly, next year, the
69.70. We'll see. If it goes back into 75 and goes bright green, then we'll come do a re-entry. We can go in for another buy. And again, you're looking at 5 points really. So you can just hold because we're 23 minutes away from the open. And we want this to come back down again so we can take the buys. Like I say, this is just recouping the losses from earlier on this morning. We're back up to this 36,483 level, the Dow.
Enormously by the rising housing prices, higher stock market prices, and also wages of.
Let's just have a look at gold, sorry, as well. The gold there, look, smashed our TP.
There's no reason why the Fed should so-called aggressively act. And so I think the Fed will
easy, as we said, on that one. It was a nice $100+.
And even a few 25 basis point rates, I wouldn't define that really as tightening per se. It's only if the Fed starts to say to banks, stop making risky loans, stop lending to these types of entities, that we would be beginning to even think about tightening. It's really in nobody's benefit as far as I can see. And the Fed can't control inflation when it was low. They can't control it when it's high. So
like I say, it's new territory for me. We stick to our same strategy, but like I say, we might take some losses because the market, you know, doesn't have the volume and therefore doesn't have the manipulation like I like to see, that I like to trade with. But we got 2 winning trades there. Took 4 positions, so that's totally fine. We've had quite a good day already.
Well, I continue to think the areas
done. Obviously, we've got the 3 oil trades. We've done 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 positions taken.
So cyclically sensitive.
Which accumulates to
Favor technology.
13%. Oh yeah, I took an extra one on oil. Yes, so like 6 trades basically because I double up on my positions. That's just what I do.
Historically, at interest rates compared to inflation, the so-called real interest rates has been all over the map, from hugely positive, hugely negative. I don't think you can really predict the course of interest rates by that. I think we can pretty much say that the Fed has been able to really control interest rates by their actions. And so that's really what I look at. And I see no sign that they're going to decide intellectually, oh, we should raise interest rates because of maybe a temporary burst in inflation, which may jeopardize their other more important goal, really, which is keeping unemployment low. That's more important to me. So I'm expecting the Fed to disappoint the market once again, year after year. We never get that rate hike people are looking for.
Matt, I know you're taking the other side of this trade.
Yeah, we are taking it. Again, we respect that opinion. And one of the interesting things about this is, if I had told someone with absolute certainty that inflation was going to be about 7%, give or take, by the end of this year, if you knew that, if you had 100% certainty you knew that, you
Doesn't see the futures there, look, winting.
10-year treasury at 1.5%. So you have to have a view and you have to have a forecast, but then you have to understand how much conviction do you have in that forecast, and how much do you change your investment portfolio based on a forecast. And last year was an excellent lesson that even with perfect forecast, if you knew it was going to print almost 7%, you probably would have thought rates would be a lot higher, and you would have been wrong. So our conviction for next year in fixed income is to not have conviction, to be underweight fixed income relative in a diversified portfolio, right? But not tilt too much. Don't shrink interest rate duration too much. Don't be too out of treasuries. Be balanced across. Again, we overweight spread products, we underweight treasuries, but the different views in the market shows you that having that conviction
Listen to
too much
listen to
would
what
be
you're
the wrong
saying.
call. But we do feel very strong the Fed will not disappoint. Right now, we have the most negative real rates we have ever seen. Bloomberg data back to 1962, we have never seen negative real rates of this level. And so even if inflation drops to 4% and the Fed funds rate got to 2%, which is probably not going to do, you'd still have negative 2% real rates. That's very stimulative. So we do believe the Fed has switched tack and is going to continue to. And we do believe we will get those 4 hikes next year, even more than the Fed's anticipating themselves.
And those deeply negative real interest rates have supported this equity market as well. Risk assets overcoming numerous headwinds this year. On the S&P 500, we've closed at a record high on nearly 30% of trading days through 2021. Bloomberg's Abigail Dillittle has more. Hey, Abby.
Hey, John. Well, it's really pretty amazing, the gains that we've had this year, all of these record highs, a third big up year in a row. And around this time last year, we were talking about what did strategists think for this year. David Costin, I believe, was the street high at that time at 4,400. Well, clearly with the S&P 500 well above that, we have blown through that, and strategists think that 2022 is going to be pretty good too. Outside of the low estimate, and I think that may be Morgan Stanley, although you could correct me, John, 4,400. The rest of the averages, the average, the median, the high, certainly the high of 5330, suggests that we could see another double-digit gain for the S&P 500. Really pretty incredible. As for the dollar, it's been a very strong year for the dollar this year. That dollar index up about 7%, the best year since 2015. Hedge funds think that 2022 is going to be pretty bullish for the dollar too, looking at the best positioning since 2019. Now, it's interesting, a strong dollar in old school terms supports stocks rising, but in Federal Reserve terms, sometimes it could mean pressure for risk assets. Let's see whether or not that's the case. But if the dollar does rise, it would seem to suggest rates going higher. And as you were talking about before, bank after bank saying that we will see the 10-year yield back above 2% at some point. If that happens, John, and that strong uptrend you can see there starting at the beginning of this year, of 2020, it suggests that we'll see that 10-year yield at 2% for the first time, perhaps in 2.5 years.
Abby, great work, as always. Just about through 150 on a 10-year this morning. In your equity market, positive 4 points on the S&P, advancing around about 0.1%. Coming up, a surge in Omicron cases, leaving the Biden administration without a coherent message.
Even if it is less deadly than Delta, it is still much more transmissible. And, people can't go to work if they have the virus. So it's going to have an economic impact, whether or not it's deadly.
That conversation coming up from New York. This is Bloomberg.
Right, just topped up my coffee. Again, there's that zone you see. As I say, if you was in a buy, come to 74, look, if it's 75, we're in, but look how close we are to resistance. So really, you know, it might not make it anyway, but if it did, it's a very cautious trade you have to take on that, because it could just flash up 4 points, 4 pips, look, and then you're back out again. So much as I love trading the RSI, when it gets into these zones, you just got to be a little bit careful when you're sat on a key level, which we are at the moment.
Across most of my lifetime, you know, I've been waiting for this legislation for months.
Again, now we'll just move this TP because I want it to be there, ideally for the
for decades, and it hasn't happened for all kinds of reasons. The American public has been rightly impatient. Now we're getting it done, both making up for lost time and laying a better foundation for the future.
We're taking a sell, so want to be viable. It's gone. Look at that RSI's now. It's now in key level. This is where some people would be in on a
lowering some of the costs that
buy.
Americans feel most acutely.
Trying to set up where I think could get price coming back to, but spikes here. Look, so this is where
making sure that we ease some of those labor market issues we have by making it easier for working parents.
These balances will be the N1 open. Should want to take sells on. Go the opposite way, but this is a buy at the moment. Look, who's in here? Sat right in the breakout zone. You can see. Where you get in for a cheeky buy.
The effects of each new wave has had diminishing impacts on both growth and to some extent inflation, as well as people are tired of the pandemic. And so I think we have seen a great deal
we'll just get rid of that now, because obviously that trade is done and dusted, and we hit our target. Gold, as you can see, look, double tap on the bottom. You know, again, we're looking to take buys on this for
and even to some extent
in my open.
The spending patterns is diminishing.
Many people absolutely exhausted by it. The Biden administration struggling to settle on a coherent message, with new data complicating the Omicron response. A briefing coming from the White House later this morning as global cases push above 1 million for a second day. For more, Bloomberg's Joe Matthew joins us from DC.
That's what I want to see.
Morning, Jonathan. This is a regularly scheduled briefing. I want to be clear of the president's COVID response team. They're held normally at the White House. They typically do not make news, but there's a new level of urgency with that number you just mentioned, the second straight day that we've seen over 1 million cases. Now, that is worldwide. We also saw the 7-day rolling average, which we follow very closely, also hit a new all-time high. Jonathan, it's up 50% from just a month ago, reminding us of how quickly this variant is spreading. Now, here in the U.S., we're also looking at all-time highs, with the 7-day rolling average here hitting 267,000 cases. CDC says the Washington, D.C. area where I am sitting right now is now officially the epicenter here in the United States, as the District of Columbia, Maryland, and Virginia all have the highest case numbers that we've seen here in the pandemic here. It's something that is
Bitcoin, again, still under 50,000. I really want to get back in on it when we're back at 50. Let's see. So Hex is back up. Hex now number 6. Some really good volume behind it. Hex has jumped to number 6. Cardano. Avalanche has dropped down the table, slub of Doge and Shiba. So there, these are good ones too. 29 cents Hex, about 2,000% for the year. So
this is top of mind without a doubt about it, Joe. Going into year end though, here at Bloomberg at least, we're looking for those Fed picks. How close are we, Joe? What are the names?
Boy, you know, that's a great question. The short list remains the same.
We're looking for sales on US 30, so this news might just help.
Potentially, we hear about a number of folks with and without experience on the
there you
Fed.
see, look, just pushing against our trend line. We've got
That's
10
why
minutes till we're going to be entering some trades.
more than a month ago. We're going into the new
The
year.
oil
The
back
president's
test
in
for you
Delaware. It's
guys.
not likely we're going to be hearing about any of this until we come back in 2022.
Joe Matthew, thank you, sir. Down in Washington, D.C. on the latest. We caught up with BTIG's Isaac Boltanski on this. Take a listen to what he had to say.
If you took a long here, look,
they're looking for a win.
on the next break of the RSI, look, yeah.
The three candidates we've talked
Again,
about all appear as though they can be confirmed.
stop
So
loss
that's
would
number
be
one. Number two is I
probably
think that you're looking for folks
that zone there, look,
who are
again,
willing to
and you
stick with the
could look for
consensus of a Powell
again 100
Let's bring in
pips
Margie Patel and Matt Dees up for
at
more
a
on this.
time.
Margie, we've walked through
1
your
pip at a
round
time
of
is
the Federal
our
Reserve. Can you help me
motto.
understand
So
whether these Fed picks are a piece of that?
I
into
don't
that
think I would expect the Fed picks
Yeah.
to materially change the direction of the Fed. I think
that
they're
last
committed to
spike,
this low interest rate
that's more
policy, ignoring inflation, looking at the other economic factors. And as I said before, I think you can.
You could hold,
throw
as soon
out
as you
the
see
old
that blue
rule
zone,
books
look,
we
you're
used to
out the
use
trade.
about the
So there's
relationship
another
of
winning
interest
trade.
rates, the Fed,
Just using
and
the
inflation.
RSI
They simply aren't relevant
scanner.
to the new world
It
that the
goes
Fed's
red here,
operating
look,
in, which
doesn't
is
really do
secular
anything,
low
doesn't
rates,
poke
no
out.
more
You're really
cyclicality
close to the
we've
points
seen
of
in
interest.
previous
You wouldn't
cycles.
take
So I
that
think the
trade,
new
but
pick
then the
will more or
green one
less
here,
be
when it breaks
part
above,
of
look,
that. I
you
think
take
the
that
Fed's
again,
always
but
been
again,
very
you know
committed
you're
on
only
this,
going to
supported
get
by hundreds of
level,
very
you're only
competent
going to
economists.
get
So I see
that
no
blue
change
zone. So
from
you
the
want to
from
risk
the
and go for 5
Your
pips or
response?
trade alone. Me personally would leave all
so
this alone
obviously monetary
until I see
policy right
price
now, there's a
break
lot of
a key level.
uncertainty.
Doesn't
So in a normal
sell.
environment, you get,
Again, you want to take the buy, you're eager, there it is. There's your entry
you
point.
might be more concerned because again, not that a
Or the
policy
buy
error is going
be
to happen,
that
but we're in an
candle
environment where the risks of a policy
there,
error
look, or
are
this one, probably that one, look, because you're right against the points of interest zone again.
given
I
how
would get in on
high
the
government is, a 50-50
top or midway of that candle.
will need picks
Stop loss
that
is
get
going to be,
through. So they're going to have to be
yeah, look,
relatively
see?
mainstream. They're going to obviously be on the more dovish
Again,
side, but
you're
they're
going to
be
look
more
for
mainstream. But even
100
with that said,
points.
at the end of the day,
Bang.
you know, at 0%,
Easy.
Everyone's a dove. At 7% inflation, almost everyone's a hawk, right? So whoever you mix into the Fed that gets to the
Another
Fed at the end of the
winning
day, they're
trade
not
there,
going
look.
to sway the Fed too much. With Powell and the leadership already shifting tack,
Again, RSI
they'll fit into that. And again, if the plan is for the
comes
Fed
out of the
to
zone,
hike,
so again you could
still no
take,
longer
literally you could
equity.
get in on a sell on this one here. There's your winning trade there, look, and then I would be in on this sell there. Look at that. Another position to
Given everything
take.
you've said and everything you've heard this morning,
Nice to do this,
if
back
Margie
test
was
this and just see
right,
how effective it
if
is.
Margie
And
turns out to be right with her
again,
forecast that this Fed's going to do
gonna
nothing
be
next year, Matt, how would it change your
100
call
points.
on this market through 22?
Great. And your stop loss, yeah, your stop loss is going to be, you know, going to be above that points of interest line if you're really less risky, or you want to be right above on the blue zone here. For me, that'll probably do it.
Right now is to have less interest rate risk in your portfolio.
Again,
That doesn't mean have no interest
you
rate
hit
risk.
your
Doesn't mean have dramatically different
TP kind of like 20 minutes later. I just think this is all this morning, you know, trading oil.
That should work fine in either environment. Again, we build a portfolio that's resilient.
Again, you could even go back in again.
Now, certainly, obviously, we better
Once that one's ended, you could get straight back in on this candle here, look. And again, you'd be out on that blue zone.
The deal with the uncertainty would be better.
And again, once these zones are in here, you won't take any trades because you just know it's going to bounce. It's just not worth the risk. But then when you see the break here, that candle, this one here, look, there's the one you're getting on. So that would be your next short. You're there, look. Either this one or this one, I'll put it there. And it's gone bright red as well, so again, I'm just going to go for 100 points, 10 pips. Stop loss is obviously going to be above that. So you've got your flat baseline, so there's your risk to reward again.
Year after year, that incremental excess.
And again, that is another nice
You have to lengthen your
winning
time frame, not think too much about the volatility. What's that going to do first quarter, second quarter?
Done in sort of 3 minutes or so. So there's 1, 2, 3, 4, 5, 6, like 10 trades there if you just want to scalp oil using the RSI. Nice and easy.
keep that modest overweight.
10
earn an
pips a
additional
trade,
spread over time,
perfect.
be balanced and diversified, and that will be a winning portfolio pretty much for whatever
Here you
market
could have gone
throws
back
at
in
us.
again, but again you're sat on these blue zones, so I always advise against that. Support zones, 2 of them as well. Much as I love getting in on these for flash trading, I would avoid it in this scenario because just it's major support. You've got breakout zone, you've got 2 blue zones, so again you wait.
From New York City, this is Bloomberg.
Goes grey, neutral zone, no trade, no trade. Again, goes red here, look, but look, no break. Breaks, below it again. Are you sat on a blue zone, support zone? You don't take the trade. And then the trend line forms to give you more. Then you get a morning star. Doge to tell you reversal is coming. RSI pops back into the zone, neutral, here's your buy. Perfect, just finishes above breakout zone. Sorry, the points of interest. Again, look for 100 points. About that, look. 9. And again, where's your stop loss going to be? Where your stop loss is going to be, have to be, at least on this zone here, at least where them candles are here. So again, that's the art of scalping. You've got to go with what it is. The risk reward is what it is. Can't just say I'm only going to do 3 to 4, 4 to 1, whatever. It doesn't work like that. It is what it is. And if the stop loss is too heavy for you to swallow, then don't take the trade. You don't have to take the trade. Wait for a better setup. But for me, I'd probably, well, the other side, that trend line would do me. I'd be protected. And of course, again, look, it hit the TP anyway within, what, 6 minutes or so. So, it's already hit before you even got a chance to worry about a no trade, no trade. Again, might get in on this one here, might get on that. Again, maybe you're so close to the zone again. I'm being halfway
we're going to step by step
on that one.
Everything. And what does that mean?
That's where we are now. Oil. So this could be potentially your only loss, because obviously you'd enter there. So you missed you enter the top of that candle on 100 points. Well, again, you're going to, that's going to be your target. You're not going to get any more than 70. You decide whether to do it, and then your stop loss is going to be again the side of this, the trend line. So you're still in the trade. Look, you're not stopped out, but you might end the trade now because you're down. Apart from that, that's probably the only losing one if you took that trade. You might not, but I have 15 trades. That's pretty good. Should be done anyway. You don't want to be over trading too much on oil specifically. Actually, I like to do it mostly on
seeing a strengthening
the news.
for US non-residential construction. We're unchanged there.
Right, okay, we've got 2 minutes to go. Let's get back to what we're focusing on, which is the NY Open. We're going to be trying to look for buys on
this is Bloomberg.
Buys on gold and sells on. It's already hit the TP there, look, so we're just going to lower that down to the next level. That's all you have to do. You know what you're looking for. We're going to be looking for 50 to 100. Yes. And then we're going to be looking for the buys on gold. Perfect. Pointing down. We'll hold on that. So let's just log into the broker. And see how we're going to do on this one. Open. Say we're about 2-3 minutes away, and we're just going to go, like I say, 50 to 100 points is all we want to be doing really.
When you think space, you probably think One space agency
Setting
that
that.
travels under the radar is
It's 30.
which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We're doing good profit, so these trades early. Let's see. Yeah, I'm just doing this for the example of YouTube on here. We're looking for sales. We're already $100 in profit.
If we want to have successful human missions to Mars,
Just see.
we are going to have to learn to live and work off-world in a different way.
Like a minute to go.
The place where we are going to learn to do that is on the moon.
Why open? Obviously it's going to spike around, but I like seeing that. I don't get scared by it. I like seeing it because you can go both ways. That's the good thing about this. You know, on these opens, if you miss or you have a loss, you can go the reverse because it will do. For the first 15 minutes is kind of the best period to trade. A lot of traders won't trade the first half an hour of the open, but I'm like crazy because that's the best period to do it. Oh, we've hit TP. There we go. So I'm already done. What was that? 10 seconds after the open. I've just nailed US 30 there. That was 38 and 38. That was 100 points, 10 pips each. So 76, so that's $100 there. $100 bagged on US 30 on the sell, going the way of the news, as the news was worse than expected.
Made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
There we go, look, you can see there, look, it's hit the TP. Zooming. Perfect. There you go, look at that.
Good morning to you all. This Wednesday morning, here's the state of play. Futures up around about 2 or 3, basically unchanged.
Like how they say futures are up, but we're selling. Thanks, Bloomberg. We love you.
That slow clap, where's that coming from? That really capturing the moment. A slow clap into the end of 21. Switch up the board and get to the bond market. Your 10-year yield looks like this.
Get bonds. Boring. Right.
Waking up.
There we go, there's our sell. Let's just see what gold's going to do. It's against us at the moment, it's popping down. You know, we might have to end this trade. If not, we'll go back in. We wanted to break that trend line, we'll just hold. It's fine. And again, my stop loss is going to be down here anyway. Pretty fine.
Here's your open. Advancing 0.0.
Oh, and we're in profit. We're going to end. We're done. There you go. Brilliant. We've got 30 and 30, so about another $80, $90 there on gold. And that is the open done, ladies and gentlemen. 2 trades, 4 positions, going with the news results this time from the pre-market news that got announced, and the job is done. Gold. All done. You can hold long if you want. It's just, this is how I scalp. Multiple trading. I'm not greedy. Greed is what makes you lose. And that's it. I'll watch this spike up a bit more. I was happy with that. Again, got nearly $200 in best part of 2 minutes. So why you want to risk any more than that? Some people have to wait a week for that kind of profit. Swing trading. Not me, I haven't got the time. I like to do my trading within 90 minutes and done. So, as you can see, look, it's messing around. It's sat on our trend line. It's going up, going down. You know, pop screen could hit this. Doesn't matter. I took the profit. I got bang in on that open 1 minute before the opens, where I always do my trading. And we're there. Stop loss, you know, would be down here somewhere. So.
They've tried to affect interest rates in the past, in the whole post-war period, and they haven't been very successful in their various, say, Operation Twists. However, they never threw as much money at the market as they have now. When you throw hundreds of billions of dollars, it's amazing what you can do about controlling interest rates, and the Fed has done that. We see that also globally in central banks everywhere. So the U.S. actually has relatively higher rates than those in Europe right now, in developed Europe. So we think there's no reason whatsoever for the Fed to raise rates just because of an intellectual concept. Well, inflation is high, maybe for a while, maybe for a short term, and maybe slow the economy
some
down.
Nice trades. Let's just have a look.
Wealth through lower housing prices, higher unemployment. I think they're much more concerned about unemployment. They're very pleased with wages going up. So if anything, we're in the virtuous part of the cycle of higher inflation. That may change down the road, and by that I mean several years down the road. But right now, I think they're actually very pleased, and they'd much rather talk about, well, one day we'll raise rates, but let's see when they actually do that. And I think for a lot of investors, it's very hard to throw out the old rule book that's worked over the past several decades and say we need a new way of thinking, which I think says basically stocks are going to continue to be more attractive. And actually, the U.S. economy has never looked, in my opinion, more attractive than it's looked pretty much over many decades. I think we've had a swing back to the U.S. away from the emerging markets.
That's it. Yeah, you just gotta.
Emerging markets joined the World
There you go. Look, and now it's going to go and hit it. Perfect. As I said, there'll be manipulation on the first candle, and
intellectual property
done.
back here. So that's going to be a strength we
on
haven't
gold.
seen
So you could have held and got maybe
years.
100 on that. I was happy with what I won.
I think the pendulum swung even before we started COVID. We started to see hints this was occurring on corporations.
Margaret, use the P word as you explained all of that. You said this is permanent, that the Fed's going to stay down here. This is some really original stuff, and I'm not here to say your forecast is going to be wrong. It's a forecast by definition. It won't be until
goes how I said. Just have to be patient. That's it. I ended it early just because I'd already got my money. Yes, you know, that's why I can't teach. That's up to you guys. Each to your own. People say, "Oh, you could have held to that level. Why'd you show it and you don't take the level?" Because I just want to take the money. You know, it's the direction that I'm more bothered about. The direction is what you want to get right first. Then that's up to you as a person as how much money you want to take off the table. Does it matter if you get out of trade in 30 seconds? Does it matter if you get out of trade in 5 minutes? Who's right, who's wrong in telling you that? Nobody. Like I say to you, the way I see it is the longer you're in a trade, the more you're exposed to the market, the more chance it is of going wrong with you. Well, so now I'm going to do, you know, obviously not this week because of the volume, 25 to 30 positions a day when I trade. So it will all accumulate, and that's what I do. I'm not looking for 2 golden trades that are going to make me £1 million. There's one that don't exist, and 2 you're more likely to lose £1 million. There you go. But look, the TA was right. You know, I get more of a buzz knowing I took some money. I took $80 to $90 there in 30 seconds. You know, some people earn that in a day. So, you know, it's all comparative. Not being greedy, and my TA was bang on. Look at that. That's this is what I get more excited about, is that,
do you agree with that? That inflation is here, so rates have got to move. I mean, that is logical. It's intuitive. Inflation's close to 7%. Not all of it is caused by supply chain.
Now we'll wait for this news. Again, I don't know. This is the first time, not the first time I've traded pending homes, but this will be the first time trading it during this time of year. So I haven't got a clue what's going to happen. I'm going to go for it because obviously we're well up, we're well in profit today. We'll just do our usual. If we take a loss, we take a loss. I hope we don't. You know, I don't look to take losses, but we'll try this and see what kind of volume, if we get a move or not. It's fairly a basic, straightforward news result.
In terms of does the Fed have to act,
again, it's looking to be worse than previous last month and year on year. Down from 7.5 to 0 and down from -1 to -6. So overall it's looking bearish. If it's worse than that, we can look at taking a sell, or you could go with gold and go the opposite direction. And then we're back for the crude oil. You know, we'll do a slow trade on the old EIA result, which is kind of like one of the last ones of this year. So that's why I like to trade it. It will be interesting to see. I'll just post that into the group so everyone can see what I'm going to be trading.
There wasn't any grain of truth in that.
Like I say, we've got oil set up on our chart anyway, because these are all the trades you could have taken. You know, including, look now, you would have hit DP, bang, on that trade. There you go. Your stop loss wouldn't have been hit. Look, tried to spike. You're below that trend line, remember, look. Always go just below. Cover yourself. So if you didn't catch that initial, now you would have done, look, now you'd be in. You know, if I'd entered the trade here, I'd be getting out of the trade now, you know, break even or whatever. Because the news is coming up, you don't want to be sat in a trade when the news comes, unless you're not bothered about the volatility. But if you're going in the wrong direction, obviously you're going to end the trade on a loss. So this is just an example, just to show that if you had entered top of that candle, now look, you're about break even, and for me, I'd just end the trade. You're against a trend line. It's just broke through. Look, RSI is 58. Chance it could poke up. Now it's coming back down, so I'd be 100% ending that trade. Break even, 1 pip loss maybe. No.
To a more reasonable level of rates for the next year or two to really slow this down and help out the consumer.
Definitely now look, because it's come back down below our baseline. So like I say, you can't win them all. It doesn't matter who tells you bullshit 90%, 100% winning strategies. They don't exist. But what you can be is consistent in the way you do things. And consistency will bring profit and bring the rewards. But you're doing the same thing over and over and over again. That's what you have to do this, especially using our axe trading system and how I trade the news. The guys in the group know I repeat myself every day. Well, that's what it is. Hey, I'm not going to come out one day and come out with a brand new system I invented overnight that suddenly makes everyone a million. I wish I could, but it's all about repetitive, and my job is to try and teach people to be repetitive, so it becomes second nature, and that takes the stress and strain out of trading. It's the unknown in trading that scares people. Don't know if I'm going to take a loss, don't know if I'm going to take a win. But if you've got a system that you stick to, you do it repetitively, like anything. When something becomes repetitive, it just becomes second nature. You don't worry about you know, the effects or anything, you know. So it is all about that, becoming a repetitive trader. This is how the big traders, big banks, everything do it day in, day out.
To the equity market, and in the face of persistent inflation, that means margins are going to be something we continue to have to watch very closely. And obviously, we'll start getting an idea of what that picture looks like going forward in just a few weeks. JP Morgan kicking off fourth quarter reports on January 14th, and the financials in general are expected to see profits up 10.6%, but it's tech, no shocker there, that is seen delivering the strongest growth. 27.7% is the
Bitcoin resumes its slide, widening crypto's monthly losses.
Markets as a discount mechanism.
Hey, just gonna hold.
It's going to be really key to see if those earnings expectations can indeed continue to hold this equity market up, John.
Kelly, thank you. Some final thoughts now with Margaret Patel and Matt Dizok. A ton of response over the Bloomberg terminal on some of the comments coming from Margaret Patel. Margaret, you said the Fed has learned, and I want to sit on that moment just for a little bit longer.
On our neutral resistance zone. So again, you know, any buy you were holding, you would be out now as soon as you see that hits that blue zone, and definitely when it hits our pivot, and then you can re-enter once it breaks that line to go to the next level. But as you can see there, look, that is holding, and you've also got this peak again. When you see these mountain peaks on the RSI, that's a good sign to get out of a trade as well.
As they might have wished.
Usually,
they've caused recessions many times.
The penny homes we're going to go in on.
They were flooding the market.
Gold's on it. Look, see here. Look, so I highlighted that it affects gold.
They were unsuccessful for years. Now they seem to.
And there's the crude as well. Again, that all affects gold. If you keep trading gold for news, you can do. I'll probably go on US 30. Look at that move on US 30. Perfect.
If I were in charge of the Fed, what I would have done. But this is a reality as investors we have, so it doesn't matter.
Hit our TP. Look at that. Does it matter it went up? Doesn't matter. We hit our TP. We've got the analysis spot on. And basically, because this is market manipulation that we have traded with and won. This is your second leg. W look. See. That's perfect. And here is where you should, again I'm yakking away, but this is where you would have got in on a secondary trade, a buy there. You should have been in on that buy.
Because maybe inflation is going to be more
100 points.
if that costs people jobs, costs their wages.
Yeah, I just want to see that RSI.
Assets,
Very rare you get one of these with just one candle, and obviously that would have been a losing trade.
You can look at the
Well, again, it might not have been. Well, it would have been, yes, of course, sorry, yeah, because of this. That would have been a loser there if you'd taken that, but you want to take it because look, it's right on a points of interest. This one was just below. Obviously spiked up above it, so that's, oh, well done. You, if some of the group got the buy, yeah, that would have been perfect. Swing this round because that spike down there because the news was bad. It just shows you how we trade, the manipulation of the news.
So we're going to raise our rate, increase the burden on U.S.
And then
taxpayers
there
so
is
they
your
can pay foreign investors more interest.
second leg buy, yeah, that was a good buy to take on US 30.
You may not like where we are with inflation, but you have to really like the fundamentals of the economy. I think at worst, the Fed will lower the ultimate productivity and growth of the economy by distorting capital flows. But in the meantime, we're on, I think...
So with the trading system, the guys know there's plenty of opportunities to trade. That's just the good thing about it. You know, whether you're trading the divergence, the RSI, the wave pattern, points of interest system, there's so many different options, and you just, you know, my job is just to piece it all together to make it easy for you. But it's why the title of the video is the best RSI trading. So it is, because the RSI is, it is what it is, and we've tweaked it a little bit for our system, you know, but it works so well. And I love the divergence. Again, look, here's a divergence, count 5 candles I do, from when it forms 1, 2, 3, 4, 5, and look at that, bang, you know, even this one here, look, 1, 2, 3, 4, 5, sell, here look, 1, 2, 3, 4, 5, sell. Divergence is excellent if you know how to read it. Now you've got the pullback, look, drop, it's going to drop out of the zone. If it goes back in and breaks this, catch another buy. We've got 15 minutes till the news comes out, so we might be able to get back in on a buy here, look.
We continue to believe the Fed does have control of high inflation.
I'm sat talking, I could be earning, you know what I mean? That's
through Volk and other places. You can certainly affect inflation, bring it down by having a very tight monetary policy. That works. However, the lessons from Japan, Europe, and now the U.S. over the last 2 years shows you what we believe.
Again, just use one to be, if you're looking at trading near this, these are like flash trades.
Together to create that inflation. You need to create the base money.
Yeah, and that was just, you know, part of that second leg.
The combination.
It's this is heavy resistance now. It's up against.
Huge deficit. That being financed by the Fed.
We're out. Done. Bang. There we go. What do we get? What do we get? Let's have a look. We've got 13 and 15. We've got £28. What's that? About $40 there while I was talking to you in 30 seconds. That's the art of scalping again. And again, I'll just post that.
Where we feel we're already, as you put it, running a little too hot, need to restrain it to get it more sustainable, and the market thinks this is the right course, and that's why the yield curves are coming back up a little bit. The final note on equity markets, because that came up a little bit before, and EPS splits, et cetera. High inflation is, or higher than normal inflation is generally good for equity markets.
Well, there you go. And that's again just a quick, you know, $40, but it all adds up again because I love these are all bonus trades that, you know, I love catching because of the RSI. RSI told me go for it. But most people are looking to take sells here because they're going it's overbought. You know, to me these are continuations. I'm mindful of a sell, but look at the bull run. Look at our dashboard. 87% bullish momentum. Is it going to be selling? No. So for people who use RSI the wrong way, which is go, hey, it's overbought. Let me bang loads of sells in. Goodbye to your account. At the moment, you know, it might drop. There's a chance, but the bigger percentage is like I just did it. I just got $40 in 10 seconds. It's because I'm reading our system here that's telling me the momentum is still to the upside. We're banging against this heavy resistance, but use that as your TP. Don't use it to run away from. Know that this is where price has got a good chance of going to. Look, 79, you see, breaking a new level. Previous level was 76. Just scan back on it. Look, you can see hasn't been this high since. There you go. Look, it hit 84. It did yesterday, 3 o'clock. Great. So now we're 10 minutes away from the news. gold. With a nice W as well, look. Expect this to drop. Not yet though. This is still against this resistance zone. Let's watch the update for a second. Let's just see where we are. As you can see, look, 25 as is down.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron, because as we know, many parts of the world use different types of vaccines, and that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample.
Right, let's have a look back at the chart.
When you translate,
Let's have the countdown running in the background. 10 minutes. Like I say, choose your poison US 30 or gold.
To neutralize this variant.
Compare if you want.
Here today that the virus Omicron variant still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines will work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims front.
How are you thinking about those dynamics?
They certainly need to do something to lift the sentiment at the moment, because as we've just seen from the latest data, consumer sentiment is not great at the moment in China, and I would very much ascribe that to the pressures on the property market, which are currently driving consumer sentiment, because you feel poorer if those values aren't going up as fast anymore as they used to.
I wanted to run back to Joe Matthew of Bloomberg down in Washington, D.C. to catch up with him on China, because Joe, this story in the last couple of days that China has new plane cleaning requirements. The likes of Delta have had to turn back a plane that was heading to Shanghai. I understand the State Department's trying to get involved. Joe, what's going on?
It's really something, Jonathan. We have more questions than answers about these new rules, and that's why our two governments are talking here, and airlines are kind of left in the middle wondering what's going on without a lot of guidance. That zero tolerance policy is important because it's leading up to the Beijing Olympics early February, and that's going to be the rule from here. So as we understand what's going on here, the rules include a 3-day quarantine for all air cargo crews, along with the more strict cleaning guidelines for airliners. They include a requirement to disinfect planes, Jonathan, every day they land in what is deemed a medium or high-risk city. And of course, those can change with very little notice. Now, United and American Airlines say they are working to comply with the rules to the extent that they understand them, but Delta, which you pointed out, says not so much. The rules, the quote here, are not operationally viable. Indeed, they were forced to turn that airplane around after flying all the way to Shanghai from Seattle. And Jonathan, we understand they learned about the new rules at altitude. They had already taken off hours into the flight here.
Crazy.
So imagine a world, this level of uncertainty, in which you fly across an ocean for 12 hours, have to change planes, Jonathan, only to be turned around when you get there.
Unreal. Joe, good to hear from you, buddy. Looking forward to your coverage of that a little bit later on Bloomberg Radio. Sound on, 5 p.m. Eastern Time, daily, Monday to Friday. What a story. 12 months later, 18 months, 24 months into this thing, and the difference between how we treat it here in the United States and how China treats it, unreal. Couldn't be wider. Let's get to the Chinese story in the equity market as well. Chinese tech just having a really tough time this year. On that story, here's Katie Lyons. Hey, Katie.
Hey, John. Well, Chinese tech having a tough time because the regulatory hammer has come down on it, cracking down on overseas IPOs, data security issues, and what they call monopolistic behavior. And one of the first targets of that was Alibaba. And we learned overnight that Alibaba is now looking at offloading its 30% stake in social media company Weibo, maybe trying to appease regulators a little bit on that front. But obviously, this extends well beyond Jack Ma and his empire. It's about an entire sector.
I've got about 5 minutes to go, 6 minutes to go. Just topped up my coffee again on this live stream, and look at that move on US 30. Beautiful. Look at that. Look at it flying. Perfect. Again, if you took another buy, you should be holding this buy at the moment. All the people who trade RSI and would be taking sells, you've just blown a load of money. You know, trade it the right way. It's a momentum driven relative strength index telling me it's going higher, not oversold. I keep saying this every single time, don't I? There's no such thing really as oversold, overbought. The price could go up for the next 5 years. I don't say it won't, but it could. So, you know, there's a level that tells me there's more momentum. Now it could pull back, but when it hits a resistance, at the moment there's nothing. Coming up to this zone here, look. See, here's our points of interest, and pop line across the top there. Look back. Okay, so it's coming up to this key level. See, and a reversal, retest, down. So above our trend line. So here's where I look left and go, okay, if I'm holding this trade, I'm not out in 100 points or whatever, I'll be looking to get out. Going to push and touch that. It's a great move on the US 30. Be interesting to see what the pending homes news does for it, but you know, the people who don't believe in the wave pattern, what a great second leg. You know, only this pullback by the news that we traded on the open.
To recap the headlines,
You do not want to miss this story.
Really good news on the jobless claims
How
front.
are you thinking about those dynamics?
How will pricing have to adjust or not as a result of your greener ambitions?
We ran a big survey around 32 countries. More than 30,000 people took part. And as you say, there was a big gap in between people that were worried about climate and people that were taking action.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
.26 minutes into the session, your equity market up 0.25%, just south of 4,800 at 47.98. On the Russell, we're down a tenth. On the Nasdaq, we're up a tenth. That's the price action. Here's the trading diary. What you need to be looking for through the next couple of days. The White House holding a COVID response briefing at 11 a.m. Eastern Time. The US Treasury selling $56 billion in 7-year notes at 1 p.m. We'll get Chicago PMIs on Thursday and the final round of initial jobless claims for the year. And then finally, just a brief note, the US bond market closing early on Friday. From New York City, thank you for choosing Bloomberg TV. This was the countdown to the open.
Thank you, Jonathan, and see you in 2022, my friend. Like I say, we've got about 2 minutes to go. This is going to be an interesting one. Let's see what we get. I'm going to go in on US 30. Yeah, I'm going to go in on US 30 on this. So let's just load up on my broker. Look, obviously would be cool now if the news was worse than expected, because it just goes with our TA. Does us happen like that? If the news is better than expected, then it's hopefully will push up at least to get us 100 points. Look, 178 to our next points of interest line. And if it's a sell, then it'll break this structure and we'll get, yeah, it might get 100 on the sell. Again, I'm just going to go for green. I'm not going to do a preset because, like I say, due to the low volume trading, look at RSI now come out of the zone. This is where people look to take sells, you see. More like it, but not as soon as it goes in, you know what I mean? But even now, this is just a small correction. It could just bounce and go back up again. And we've got the news, which people always forget. You know, they're always obsessed with just trading indicators and not looking at fundamentals and why markets go against them. So we're just getting ready.
Do you think the largest investment banks in the world, who are making more money trading than you can ever dream of, are gambling JPEGs, NFTs, and random crypto coins made in somebody's basement? No, they invest in composite instruments and commodities like the S&P 500 and crude oil and the dollar. How do I know?
30 seconds.
Working on one of the biggest trading floors in the world, Barclays Investment Bank, and we made more money than you can ever dream of. But we did it properly, not gambling on worthless junk taught by some kids on social media. Sounds harsh.
20 seconds, 25 seconds. Good luck, everybody. Let's see if we get a trade on this. Let's have a look. Is it going to be better than expected, worse than expected? Who knows? That's what I love about this. Obviously, the market's predicting it to be worse than expected. The consensus numbers.
Thinking that's trading. Truth is, you may as well open a betting account and trade on the horses.
Goes worse than expected month on month.
And that's why you're drawn to it. But hopefully, it's more the case that you've struggled to get access to a
minus 2.2, so that's pretty
given to the world's top
pretty bad.
Now I've put together a completely free, brand new institutional masterclass, which is going to show you
see what happens.
Step what I was
It's
doing when I was working on some of the largest trading floors in the world, and what has
better on the year on year.
The only 100% independently audited
It's a mixed bag.
trader on the internet.
So price could fluctuate either way. It's going to be quite interesting. So let's just have a look and see what we're going to get.
Click the link below to get started. The completely free institutional
Go either way on this. Let's click to 30 and see.
Best of all,
Why?
cost you nothing. So what have you got to lose? So click the link below to get started right away. I'll see you on the other side.
It's a mixed. Again, some people won't trade it because it's mixed. I like them to be the same way. Post this up here, and like I say, I'm going to wait and see. See if we get any move. Sure. This is just a bonus trade. Lost, but one each way. Mixed. Some move. Like something. So it's just ranging around. I had this feeling, you know what I mean, with this kind of news, it's just medium impacts, not really going to do much, but we'll sit on it and see. And then we've got our final news in 27 minutes, the oil. We'll trade that, and then it'll be the end of today's live stream and the end of our live streaming for 2021. I've only been going since kind of October time. I've done 60 odd live streams. I want more people to watch, obviously, and learn. I want to teach people. I love teaching, so I want people to, you know that you can earn money from scalping on small time frames. No panic. You just got to use all the knowledge that's around you. It's not just one indicator, it's a bunch of indicators, it's a system, it's a fundamental analysis, market analysis, it's price action, all together. Put the time in, repeat, learn, and you can become a professional scalper. This, as you can see, that's just ranging around a little bit, so
understand more about this virus. The second, of course, will be to protect against infections, and the third is to treat. Let's take it one after the other to understand.
Case of no trade on this, but
Not very clear yet with them. One
it's
is
up,
the clinical
down,
manifestation.
see any green, I'll get in and out within like 2 seconds, enter and get out, execute quite quickly, hopefully.
Transmitted easier or not? Is it going to younger or older people? All of these are things
Go one
that
way then
as we
see.
clinical cases coming out and the numbers are getting bigger, that's something that
Down.
we will know in a few weeks.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets.
I can see the price
Webinars.
moving around. Fine. They're real non-trade, like I say. One, because it was a mixed result. Two, just because it's medium impact. But until you try these, you don't know. That's the whole thing about trading fundamentals. One day you might hit a golden goose. This one's great, and not many people trade it. But as you can see, it's a non-starter. It needed really to be both. The year on year was better, but the month was down. So it's kind of like, well, you know. So no trade. Ignore that. That's fine though.
Good Wednesday morning. Welcome to Bloomberg Markets. I'm Matt Miller in Berlin. Paul Sweeney.
Like I say, we'll just wait for the oil news now coming up. See if we can get something on the old oil, as it's right against the resistance. It's a double top. Popped out 2 times here. Look at $76. $76.
A lot going on today, Paul. We had some Richmond Fed
So we will wait and see
manufacturing data that I thought was
on
pretty
this.
exciting.
Look at Bloomberg, anything talking about on here. US stocks tick higher. Yeah, well, it has now. It's peaked up. Look, you see, it's just ranging
We had some great
at
corporate
the moment.
news from Apple giving surprise bonuses, which is always, you know, nice this time
up to 180
of year.
grand.
Yes, although they're restricted stock bonuses that vest over the next 4 years, so you've got to stay there. And we've got another record high. If we close at this level, because we did drop yesterday,
Record
almost
high.
5 points in the end, the rally reversed.
Yeah.
But if we close at this level, we're back up more than that. We'll have a 70th record high.
7-0. Yep. Looking at, we got some eco data out this morning, Matt. Pending home sales.
We
Now,
go.
this is, I think you and I might have been in this data set here. They were off 2.2%. Month over month in November.
They're predicting it as bad news, you see. So am I going to sell?
A negative surprise.
We
but
might.
I sold a house. You bought a house. We were active in the marketplace, so I'm not sure what everybody else was doing.
I just went into contract about 2 weeks ago, you must know. So I'm not going to be in the November data.
Okay.
We won't close for a couple of months.
There you go, see.
I tell you, the housing market.
Sometimes, you know, this just clears up. There might be a sell. They're taking it from the
migration out of the cities.
month,
For the sellers, it's
not the year.
pretty
So,
fantastic.
Awesome.
And the question is,
you know, let's see if this drops down. What I'll do is I'll set a TP, might as well.
something we'll definitely be covering throughout this hour. We got that pending home sales data rising 0.2% from the previous year, but falling 2.2% for the
You got it wrong there.
figures. In terms of the markets, as you just saw, we had some movement there.
We might get 100 points. Here we are. So we'll see. We'll sit on this and wait, watch it while we.
Points in terms of bonds right now, we're seeing the 10-year yield trade at 1.517. So yield rising as investors let go of those bonds. Let's go over to Abigail Doolittle. She's got more on the markets for you. Abigail?
Ranging around. I want to see a bit of movement. I want to see the RSI come below 70.
Day, not surprisingly, in this holiday week, the S&P 500 up just a little bit, up about 0.2%. As you have mentioned, heading to
Grab a nice sell, that'd be brilliant.
Gains do hold. The NASDAQ back in the green, just fluctuating right around even. I will point out volume down even more than yesterday, if that's possible, which it is, because right now down 50% below the 20-day moving average. So a lot of traders just simply not at the desk. But where the action is, you were just talking about bonds, that 10-year yield.
If I was 50% down, this is why things are ranging around. You know, but it shows you still can trade it.
Now, Apple, I, of course, am officially on Apple $3 trillion watch for another day in a row here. Above 180, we're looking for 182.86. Let's see whether
things up a little bit.
As for next year, because, of course, this is the time when we're locking in strategist forecast for the following year, most of the estimates out there are suggesting we will see a fourth up year for the S&P 500. The low estimate of 4,400, not so much, but the high 53.30, that's a greater than 10% gain. So we could be looking at a fourth year of double-digit gains if that high estimate is in fact correct. I'm not sure what strategist that is. The average, of course, 49.50. But either way you slice and dice it, it does look like there could be some gains ahead. And then finally, if we take a look at banks, banks earlier had been higher in sympathy with yields higher, but at this point we're looking at mixed markets. JP Morgan down fractionally, Bank of America up fractionally, and then Goldman and Morgan Stanley down more than 0.2%. But I would say the main characterization of today, low volume, smaller moves, Paul.
Yeah, Abigail, thank you so much. We appreciate that. Abigail, do a little, giving us a little bit of a market view here as we open up here on this Wednesday. Let's take a look at 2022. Again, 2021, heck of a year, 28% move up in the S&P 500. What can we expect for next year? Esty Dweck, Flowbank CIO, joins us, I believe, from Geneva. That would be very cool, very close to Matt over there in Europe. Esty, give us your call, your 30,000-foot view of how you're approaching 2022 after the big gains we've seen this year.
I think the gains are going to continue, probably not on the scale that we've seen this year. It would be difficult to replicate 27%, but I do see further upside. We've had these variants come in and delay reopening, delay growth a little bit. That means prospects for 2022 are improving, as it looks like we'll move pretty quickly through the Omicron variant. Fundamentals are still pretty good. Earnings are expected to be quite
Should not be seen out, so
I think the markets are going to move.
It might still drop, but not yet.
Probably be a little bit bumpier than 2021.
Is fighting the Fed going to be one of the big problems?
I think that's one of the big questions. Now the market is pricing in 3 rate hikes already. So in a way, it's almost set the Fed up for a dovish surprise. It would be difficult for the Fed to be more hawkish than that. It's going to be very interesting to see how I think Omicron can impact supply chain disruptions, which we thought were at the peak in November, December, and improving in the first half of this year, with China's zero COVID policy and the Olympics coming up, which means they'll probably tighten even further. Those supply chain disruptions could last a bit longer, which mean inflation as well. And then the Fed is going to have that balancing act. But I do not think they're going to make it to 3 hikes.
Esty, what's your thoughts about inflation here? I mean, for people out there filling up their gas tanks, going to the supermarket, inflation is very, very real. And I guess the question a lot of folks have is, how long are we going to have to deal with this? How are you thinking about inflation as you think about next year?
That's the big question. And you can see that, especially in the US, you have that reaction from the consumer, right? As you were saying, in the grocery store, at the tank, those are things that people do frequently and really notice and feel in their wallets. So we have that reaction. We've started to see that it is having a little bit of an impact.
Hey, and it's dropped. Look, there you go. It's dropped, and
when prices become so high that consumers decide to wait
in and out on that. There we
or
go.
to hold off or to look for alternatives. I've stayed
Just got $15. I did. I took $15 on that. There we go. Pending homes ranged around a little bit. Dropped. £10. Quick. Just got to not be greedy on these kind of trades. That's it. Just.
But we've probably seen the worst of it or close to that.
A lot of that's been caused, obviously, by the supply chain disruptions due to the coronavirus. Now we've got the Omicron variant infecting another 1 million people globally. That's 2 days in a row of more than 1 million global new infections. Is this a real problem, this new wave, or is it more of a speed bump?
At least you can see it hit it.
So from a growth
And that was maybe helped by Bloomberg there. Maybe Bloomberg helped push that down.
new year, it shouldn't have that big of an impact on overall 2022 growth. I think where we have to just be careful is it is a little bit less virulent of a strain, so it does lead to less
Win is a win. That's the way you got to see it.
People that could get infected means that those hospitalization numbers could prove a little trickier than we think in the next month or so. When we look at
What we got? We've got 15 minutes to the oil news. Let's just focus on oil now. We've ended that. Look at that, nice drop. You see? See, this week you should be taking a sell. If the RSI pops out of this zone, goes red, here's where you should be taking sells on US 30.
into the end of the year and have more people with immunization.
All right, Esty, thanks so much. Esty Dweck joining us from Flowbank.
So 51.
Out of Geneva. Great to get
It got down to 48 before reversing. So you want to wait until it's broke that level.
About Tesla. Now, at the beginning of the session,
45, and then you could take a sell.
Still, the company is worth more
But we're going to focus on oil now. Oil's doing the same thing. Look, same pattern.
Continues to sell off his stake. He's getting closer and closer to the 10% level. He sold another
76.
plus.
RSI is 655, dropping down, so we'll just hold on this.
Is Bloomberg.
Just see the latest. Post oil. Oops, so see where. And again, remember with the EIA, same as the API, if you're trading the US dollar, you go the reverse result. If you're trading gold, you go with the result, and oil, also WTI West Texas I trade, you go with the result. I don't do Brent, but people can do Brent, but I do WTI, as you can see on my trading view chart. So that's kind of the formula you use for trading oil news, and it's all here. It's nothing, it's no great secret. You just read that and it tells you. Higher figure is negative for the dollar. So whatever the result is, we will go the way of it for oil and go against it if you're trading a dollar pair. Gold goes with, so this will be an interesting one to see as well. About 15 minutes to go. 50 minutes to go. That drop now on US 30. Perfect, see? Perfect. Getting with your broker. Broker is so slow at the moment. Executing trades. That's It's a nice candle. Look at that. That's a breakout candle bigger than the last 20 candles, like say. RSI is 42, just come out of the zone.
You don't, so far as I understand, have much of a business in Asia?
That's exactly right. By the way, I was brave or stupid, depending on your point of view. In 2006, 2007, we set up small investing teams in Asia. A year into it, we just shut it. It was the way the laws work. The laws may exist on a piece of paper in some of these emerging markets. They're really not followed in practice. If you want to, we want to kind of fix these businesses which get troubled. We're trying to do a lot more than just be paper investors. And your ability to make those changes operationally is really stymied. And as a result, so when we look at kind of Asia, we say, or we look at a large parts of emerging markets, we say, for the most part, not really for us.
Do you think China will become a viable market for credit investors like yourself?
There are some credit investors already in China. Some of the peers have operations out of Hong Kong. They have significant investments in China. So we will just agree to disagree. We think over the next 10 years, it's not changing. And hey, Eric,
42, it's 40, then we would take some profit.
you know, in the U.S. papers, it doesn't feel so welcoming, right? If you're a U.S. investor in there trying to restructure companies,
Let's come back in. All back.
Expertise,
See, it's forming
what distinguishes
a nice M.
Or most, let's say,
It's the key.
distressed debt.
Spikes are just the spikes.
Why limit it to distress? Why not raise a private
This kind of setup.
in 5 years, will there come
Back
a
down.
time?
Back to our neutral support zone for the day.
Private equity fund? Maybe.
That's
But 40%
your patterns for the day. Just stretching so you can see that could be.
I would think 50% plus of what we do in Fund 5 will be control-oriented investing. We're there.
But largely through debt.
Largely through that.
And tell me if I'm wrong.
Actually,
The reason I ask
let's look at that on gold. Perfect.
due to companies is what private
Again, you should have been buying gold.
many of them do to companies improve.
Then you should have got in there.
Facilitate,
Then
consolidate,
got in
with the goal of building a more
2
valuable
buys
The
on
only
gold.
difference I can see between what they do and what you do is that you're buying at a lower valuation, they're buying at a higher valuation, and applying leverage to get the same return.
We are just spoiled. when you can buy Swissport, we believe we took our equity stake at 2 times.
Now it's probably going to sell.
Maybe 2.5 times stable.
Get in now because obviously you're right against the resistance zone. So, but you could look at
Like the 2
nice sell.
businesses we are taking control of as we speak are at 5 times, 6 times.
10 points or so.
Think about private equity where the average purchase multiple is 11. Like, why would we in such a hurry to go there?
Go 5. You just go 50.
5, 6, 7.
Still own you $50 per trade.
Operationally, because these businesses are troubled in some way, right?
And it's all about not being greedy.
Great way to kind of invest. So look, we don't see
Watching gold on this look. Be a nice one.
we don't see ourselves in a hurry to go buy at 11 times EBITDA.
Tell me about SPACs. A few people.
So I just dip into 78. Wants to come out of that zone really before you look at taking an aggressive sell. Ideally, you don't be taking a sell till you're back in the neutral zone, crossing our average line. But we're talking about micro scalping here, just for a few dollars. That's totally fine. This is what, yeah, it's almost like traditional RSI trading. But I want to wait for break out of that zone to do it.
We're not a supermarket.
You've got the oil coming up, which will affect it as well.
I got one of those flavors for
Let's check on back. And now we've got 8 minutes till the oil news.
Up front, when your shares are down 20%, it's going to hurt. But talk to us about, well, really what you're seeing. Take us more forward-looking. Are you worried about people exiting pandemic era and going back to the gym, or are we going to work out at home more?
Well, that's actually the advantage that Beachbody has is we have never been a direct competitor with the gym. In fact, what we rely on is our ability to influence the 150 million people in North America specifically who are overweight or obese and haven't made that choice yet. Our job is to influence them with
Be nice for
content. And this combination
it's a wine after all this trading today. It's been a good
so that they can tap into this incredibly cost-effective solution that is entertaining and engaging right at home so that they get results. That's our job, is to help the new person engage in healthy lifestyles.
Protesters breach the Capitol.
Container ship blocking the Suez Canal. Of crypto coins.
Crackdown on tech in China. The billionaire space race.
Delta variant. Chip shortage.
Rising energy prices. The Omicron variant has
I think that it's hard to put your head around it. Let's be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to Bloomberg Markets. This is a special edition simulcast with Paul Sweeney out of New York and me, Matt.
Simulcast. 6 minutes to go. 6 minutes. Get ready for the final live news trade of 2022. Like I said, I should try and be around tomorrow to trade some of the jobless claims. I won't be able to do a live stream possibly, but we'll see. But this will be, this will be the last live stream of 2022, and like I say, I just want to 2021 2022 2021, and looking forward to 2022 and doing way more and having more people join in. You're talking on my own, it'd be great if people can actually join in, and if you join the Discord group, you've got access, so you can join in with me on the live stream and talk about the markets, anything crypto, stocks, shares, Forex, doesn't really matter. I'm into trading it all. Just want some people to join in with me, so I'm not rambling on my own. I've got a good system, a good setup, good team. We know what we're doing, and we try and do the best. And I just want to try and help people out there as best I can, and to give you an edge. If you like scalping, not everyone does, not for them. So that's the goal for 2022. So like I say, please hit that like button, subscribe and share. It's all appreciated. Makes a big difference as we're trying to grow this channel on YouTube.
Very close to that 10% stake threshold that he tweeted about just a couple months ago. 15.6 million shares is how much he's offloaded. He has to get to 17 million to really hit that threshold. But really, he's making $24 billion off of this so far in doing that. And the reason for that, I just want to quickly explain to our viewers who perhaps aren't familiar with what exactly he's doing. He's exercising options he bought back in 2012, back when Tesla was trading below $10 a share. It's now, of course, above 1,000. And then he's buying essentially Tesla shares at that value and then selling them again at the current value. And that's how he's really making billions off of this trade. And he's doing this, of course, so that not only does he have to pay taxes on the options that he acquired, but this also has to do with, of course, a very profitable trade that he's making right now.
Yeah, I'm looking at the stock created. I mean, stock's up 50% year to date, despite the big sales by Elon Musk here. And as Dan Ives was saying, Dan's very bullish, and it seems like most of the street remains bullish on this. And I think that's very interesting because in the last year, we've seen the world's automakers, I'm talking GM, Ford, Volkswagen, the big players, make huge commitments to the EV market. It's going to get a lot more competitive over the next several years.
Oil.
A lot more competitive, and Tesla
Watching gold as well. Got a pullback on gold. Get a bit of profit on gold.
Getting the world to take on electric vehicles. They're also really
And we have. Yes, look at that spike. That's it. That little move. Yeah, got in on the sell on that. What did I get? Yeah, what did I get? What did I get? I got 26 and 22. So that was 50 pounds, about $75 there. Look, while we were talking, just saw that, nipped in, grabbed that sell. Bonus trade.
A very long-term plan. In the short term, though, to the point of Dan Ives, he's talking about expanding in China. He's also talking about building factories in Germany as well, which we also know is kind of building its own
Waiting for the oil news.
That's a little bit more localized to
Make sure I'm not in a trade when the news comes out, of course. That spike. It's a little move, that's all it. Look, there it is, look, there it is.
So getting that supply chain
There's a zone, look.
Is something that's going to really not only play into Tesla's bottom line, but play
Put in a cheeky little sell there. So you're looking for $10, $20, ended up with 50, so 75. So yeah, 50. It was £50. So
need
Brilliant.
is charging stations and infrastructure that hasn't really been built out globally. Although
Oil.
it has to be said, Tesla has done an incredible job with its supercharger network. The other players like Rivian and General Motors, also Ford and Volkswagen, Lucid, etc., they have a long way to go to catch up. Although, I guess reportedly Tesla is going to open up the supercharger network to competitors. This is a huge advantage that Elon Musk has right now.
A huge advantage, and I should also mention the other advantage he has comes from what you're going to
To
get
oil,
from the federal government as well.
2 minutes to go.
Tesla is actually
Gas and
the
oil.
benefactor of a lot of tax credits because the idea
Just
of what
make
they
sure
do
I'm on
is actually at the
broker
end
on
of the day
oil.
sustainable. It's green energy essentially, and so a lot
Okay.
of those tax credits that they get from the federal government has been helping them with this expansion. And on top of that, not only are we talking about Tesla's charging network, but you're also
See if we
talking
can,
about a national
good.
kind of effort to create this kind of EV infrastructure, and that's going to be something that we really have to see how that pans out. We also know it is part of that Build Back Better
Countdown, 1 minute to go.
bill as well. The question
Again, could be another slow burner. Doesn't really matter. We're in good profit today, so we can afford to enter a trade and hold it if we need to.
And now they're going to be dealing with candidates from Ford, from GM, from other trusted automakers that have had their business for years on end.
All right, Kriti Gupta, thank you so much. We appreciate that. As always, Kriti Gupta, Bloomberg Markets
I'm down, about 2 minutes to go, 1.5 minutes to go as we're counting down.
Well, my wife is really encouraging me to lean in that direction. I would like to, but one of the biggest problems is inventory, right? For example, I'd love to.
It's going to be time for a glass of red wine, I think, as we're still the holiday period, like I say. So, but it's just nice to do some live streams in between Christmas and New Year. Didn't know if I was going to do them, didn't know if it was going to be anything worth trading, but obviously we've shown that there is, and we've done about 25, 26 trades today, so which is really good. Here's the countdown, so we've about 30 seconds left on oil. Again, this could be a long drawn out thing. Let's go for it anyway. We're loaded up, we're on our chart. Broker's ready. And no panic on this.
Doing that in a Hummer, so we're gonna have to figure out something. Looking at the markets here, you know, very mixed here. We got the S&P essentially unchanged, the Dow up 85 points, Nasdaq off 60 points. So
see how quickly this result comes out, and it's better than expected for crude oil. That's a quick one. It was a quick one, so that's quite good.
This is Bloomberg.
The energy crisis,
Good indeed. Well, you go straight into drawdown with oil. You've got to remember that, you know, because of the spreads.
I think we're at a moment in time where we're coming
Always
out of the pandemic.
bigger spreads on oil.
I think all over the world,
See a chance to win. But so don't panic. Thing about it, you know, people do panic sometimes. Always ask me how come since I enter a trade I'm in deficit. That's the way the market is. They take their money first. If I haven't got the nerve to hold, then you're not going to be a trader. No, so we'll just post that news.
You've been extremely involved in carbon offsetting. Can London really spearhead that movement?
Well, I think it's important that governments around the world partner with the private sector to try to get capital directed toward innovation in a way that we can accelerate the climate transition.
Right.
And I want to emphasize it's clearly a transition.
Cool. I'm done. There you go. I didn't mess around. Got in and out on that. Yep, job done. Job done. Didn't want to hold. I just didn't fancy holding today on that one because I've been streaming for a while, and two, I need a drink. All done. I grabbed 3 buys on that. And I didn't even see in the end what I got. It's all green. I took it. What did I get? 37, 22 and 11. So 50, 60, 70. So about $110. $110 to finish our news trading year off.
It's almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dinings, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih
There it is, look at that.
kayak dulu.
Perfect, look at that spike.
Sekarang
See?
ya ada 1-2 itu ada.
And you've even got a re-entry
Nggak kayak dulu.
on the RSI.
Sekarang paling dapat jualan ya.
Perfect. Hit that 26 zone. Could have got more. Look, you can always get more. You can always take a bigger loss as well. So that's the way I see it. $100. Look, that's perfect. You know, we've had a good trading day. I took 3 small losses. I'll show them. That's it on US 30, and they were market executions. I didn't click in time, or my broker didn't close them in time. But today we've done. Blimey, I was going to add these up. Sorry, including the oil that I traded from last night was.
People from Australia, China, and Europe to come visit next year.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it.
27 trades today with 3 losses. That is done very nicely for us. So I'm just going to post all this into the group so they can see.
That is now being reversed.
Now, after you made your famous trade that we talked about, I think you put on a trade where you bought a lot of gold or gold futures, and you were what was called by some a gold bug. You're a big believer in gold. Gold's now about $1,700 an ounce or so. Are you believing that gold is now a good investment at this price?
Yeah, we do, and thank you for bringing that up. We do believe that gold does very well in times of inflation. So
The
what
losses.
happens is if you own long-term
And my losses were actually 4, 2, and it was about $15.
5%, those bonds fall
So
materially in value. Likewise, if you have cash sitting in a bank that you're earning 0% on, inflation's 4%, you're gradually eroding the value of your money. So as inflation picks up, people try and get out of fixed income, they try and get out of cash, and the logical place to go is gold, especially if it starts to rise in inflationary times. But because the amount of money trying to move out of cash and fixed income dwarfs the amount of investable gold, that the supply and demand imbalance causes gold to rise. And the more it
So,
rises,
like I say, I just wanted to show the power of the RSI on the AX trading system.
So today you were a big believer in
You
gold.
see, look at that. The oil news really took off.
We thought in 2009 that with the Fed doing quantitative easing, which is essentially printing money, that
All
would lead
rocked.
to inflation. But what happened was that while the Fed printed money, they at the
Oil is
same
one of the
time
best ones for trading news. The only downside to oil is, obviously, like I say, when you enter the trade, there's a big spread. But the news moves so, makes such a big move, 100 points plus, that you cover that, and that's what you've got to consider. It is, the reliability of something working out. There it is, look, better than expected. We took the buy. What happened on gold? Gold
last year, and the best indicator of inflation is
didn't really do anything. It's meant to, but it didn't.
We have
I mean,
inflation coming well in excess of what the current expectations are.
All everybody, welcome back to special coverage of Bloomberg Market Special, because we are simulcasting radio and TV. We're doing it every day this week. Keep you up to date on market moves, and we'll take a look at what's going on, potentially some forecasts for 2022. It's that time of year.
Just backing off. So there could be a chance of another sell here. I'd say now I'd wait until RSI crosses our average line and then getting on a sell there. US 30, exactly the same look. It's created our double our M pattern, so we're looking possibly for a sell on that, a buy if it breaks above here. And oil, we're done. Look at that. Look at that. That just shows you just the power of the news, how fundamentally it is led. And obviously this could be creeping back up to line across that level there. Look, $77 a barrel.
The majority, the vast
So
majority.
Bloomberg doesn't even really say anything about it, you know. So it's all great stuff to trade if you're a fundamental scalper, which is what we are. Wall Street opens flat. I mean, you know, it's not. We've just made a good few $100 there, and just scalping all these kind of news events, even the minor ones, produce some small wins. So tomorrow, like you say, we've just got the jobless claims, Chicago PMI. I don't think it's worth trading, but we'll have a look at it if I'm around. The jobless claims ones for sure, but for me, 2021 is over in terms of trading.
And so that's what you're seeing now. Is it's a longer process for some, but there is no wrong time to start vaccination, to get vaccinated.
Does it make it more difficult? I mean, the fact that Paul and I, you know, we got our first couple of shots and we thought, cool, we're good to go. We don't have to wear a mask anymore. We're not going to get the
100 points.
Now, you've got to wear a mask pretty much everywhere you go, and even vaccinated people are getting the virus pretty easily.
Yes, I think that the complex nature of this virus and the changing science and what we're learning every day, it can be challenging to communicate that, you know, to the public and to let them know what we know as we know it. And you know, and I think that process takes time, and like I said, it also takes trust. And so we're in this stage where we're really building the support for kind of what we're doing, and trying to get people to understand it and to translate that science into understandable pieces of information in real time. Time after time, study after study has demonstrated that vaccination, that boosters are the best way to protect yourself and your family from COVID-19.
So at the same time, you're a social psychologist, you're a behavioral scientist. How much of this is really strong political partisanship? Because I've noticed that the same people in my Instagram and Facebook feeds who were pro-Trump and, you know, conservative Republicans, for lack of a better term, because I'm not sure if pro-Trump really makes you a conservative Republican, but those people that were vocal about that are also very vocally anti-vaccine.
Like I said, if anybody wants to join the group, I'll be doing more mentorship and one-to-ones in the next week or so. It's www.mohawkforex.com for information on how to join our team and hopefully get you to become a pro scalper. That's the whole reasoning behind it. So quick check again, like I say, US 30 is just going up a bit higher before we get some kind of hustle. Doesn't do a double top yet, so it could go all the way back up to here yet. Set that as a nice M pattern, get back down to our neutrals, kind of what I'd be looking for on 30 now.
Addressing that core trust issue. We know that some people, you know, really listen to their healthcare providers. They've got trusted providers in their lives. You know, when
well,
they go to their
yeah, look at that. We're going all the way back up. Seeing that.
That is
beautiful.
a great way to get people to kind of come around to understand the parts and processes here. And then other people, you know, they're listening to people in their church, or they're listening to people in their community circles, and yet other people can be reached by
nice, a few people caught the oil feed as well.
Why they're getting vaccinated. So it's really an across-the-board effort that we're engaged in here at CBC.
How well or how effective are vaccine mandates? Because we've seen them from corporations, from
oil is look at that testing at 77 zone. So again, all based on the news. from here, look.
They can be very effective.
So I wish it was easy as this every day.
Not just being used for COVID-19 vaccines, they've been historically used. They can be quite effective in increasing rates of vaccination. At the same time, that doesn't replace.
So again, I just want to say thank you to everyone that's watched and supported this channel, small channel that we're trying to grow. And again, thanks for everything, and have a good, happy new year. Hope you stay safe. Let's hope Omicron disappears as quickly as it came, so we can get back to normal trading and working. And hopefully I'm here to help and get more people join the group, because I love teaching and I love proving that scalping can be profitable. We've got a great system and a good team. So thanks to everyone for joining me in 2021, and here is to a happy and profitable 2022 with the Mohawk Forex scalping team. So until next year, take care, and I'll see you guys on the other side, and thanks again. Stay safe.